Good morning, everybody. Happy Friday. We made it to the end of the week. We got a lot going on today. I know I say that a lot, but for real, we've got some big time earnings. We've got CPI, inflation today. We've got some movers from yesterday that I want to talk about. And I promise you, that Joel and Dennis, and probably most of you watching, do not know why Peloton was down yesterday, but I do. I know why it was down. We're going to talk about all this and more. Ryan Detrick from LPL Financial is our guest today. Let's roll that intro and get the show started.
This is PreMarket Prep with Joel Elconin, Dennis Dick, and Spencer Israel.
Good morning, everyone in chat. John Dawson's all like, where is Joel? There is Joel. He's on the screen right now. What's up, Joel? How we doing?
Yeah, back at home, out of the pool. How's everyone doing today? What a fun day down at the office yesterday. Great to see everybody. Good to see the market recover from that 5-minute bashing. Just took my eye off it and boom, dropped 15 handles. But we're getting it back as always, up 14 and a quarter handles. I'm talking Dece now, folks. And if you haven't figured out between Dece and March now, then you probably never will. Crude's trading up 67 cents at 71.61. Gold in the red by 370. Just hanging out here too long at 17.73. Silver under 22, down 12 cents at 21.81. Bitcoin up 15.30, 49.205. Ethereum going the same way. That's up $43 at 41.67. And I already asked Triple D if he took a shower today because he's looking so spiffy. But he said no. So my second question would be, did you find a comb and or use dippity-doo on your hair?
He does look.
It just naturally flows nicely. I don't need a comb. Look how nice this hair is.
Yeah.
So
What's
flowing.
that mean for the markets?
Just nice. It's good for the market. The hair indicator says we're going to have a good day. Actually, I have no idea.
I just want to say today is a complete 180 from yesterday. I am currently the only person in the office right now. It's after 8 o'clock and I'm the only one here. Yesterday we had the whole darn company in the office, it seemed like, and today I'm by myself.
So, not one other person in there.
Not one other person is here right now. It's 8 o'clock. It's the day's starting. Anyway, as I mentioned, we have a lot to get to. But before we actually get to like the stuff we want to talk about today, I want to mention, and I've mentioned this previously, that tomorrow is the last pre-market prep special of the year. It'll be tomorrow morning, 9 a.m. Eastern to 12:30 Eastern. Joel, Dennis, Rob Friesen, I'll be there as well. Joel, tell the people how they can sign up.
Go to premarketprep.com. It's right there, the site. I want you to pull up. Well, first of all, I want Triple D to stop preparing presentations. Okay,
there's too much.
All right, he's already sent me one, and it's already going to last the entire 3.5 hours. Okay. Number two is he is giving away such good information that everyone is going to be competing with him now.
I worry about this.
And he's going to be complaining
that he
gave away all his tricks.
I worry about this.
I'm telling you, I don't know. I mean, should we cancel it? I mean, I don't know, Dennis.
It's true. I do worry about that giving away. I'm going to teach you guys, and I have it's mostly me. We got Rob, but Joel's just actually going to be coloring everything. So he's going to be the color guy here. So my first segment, 9 o'clock to 9:45, I'm going to be talking about the hidden costs of free trading. I will tell you how those off-exchange market makers make money from your retail orders. And I will tell you how to reduce your slippage and how to try to best level the playing field with them. So in other words, I'm going to show you what not to do. I'm going to show you how to execute those orders better, try to reduce your slippage. In my second segment, which is 10 to 10:45, another 40-minute segment, I'm going to be talking about the order flow. I'm going to be talking about how to read the consolidated tape. I'm going to be talking about the books. I'm going to be talking about, how I get an edge, just looking and leaping through and trying to find levels, and obviously and turning points in the market. Also going to be talking about capitulation. So how to identify when the sellers are all done and when it's time to get in. And then in my final segment, which is 11:05 to 11:45, another 40-minute segment, I'm going to be talking about the inefficiencies of the open and the close. So we know I make about half of my money at the open and the close. So we're going to be talking about, how I go about that, how I prepare for that open, how, I get an edge on that open, because, the open is a very inefficient event. Stocks open on supply and demand, and the stock might be trading here, and then it opens here. It might opens too high, too low. So we're talking about all that, talking about different order types that I use. You may not need those, and if you're at Robinhood, maybe you don't even have the option to use those. But by at least getting this information, you'll be aware of a little bit more about how the market really works.
There's no way we're going to get this in 3 minutes.
We'll get it in. I talk fast, so when you get your recording, you slow it down to half speed, you rewatch it a couple times. What we're trying to do is give you a power 3.5 hours. Rob Friesen's going to be on there, obviously, who has been a mentor for me my entire 21-year trading career. Rob Friesen, an excellent trader, the CFO of Bright Trading. He's going to be talking lots of different stuff. Basket trading. He's going to be talking about how to put the hard side of your relationship-based trade on first. And, he's going to be talking about a lot of ATRs, price levels, different movements. So Rob's got a whole pile of stuff for you as well. Rob's got 2 20-minute segments. So it's really Dennis Dick hammering.
I want to address some questions in the chat. Someone asked, if you sign up tomorrow, will you get the recording to replay at your own leisure?
Yes, you will.
Yes.
100%.
Second thing that was asked, when I said tomorrow was the last show, I didn't mean it's the last show of us. I mean, it's the last special show. It's the last Saturday show.
Last educational event.
Yes, the last paid educational event for this year. We're doing more next year, but the year ends in 2 weeks, so it'll be the last Saturday show. But obviously, we'll have our show for the rest of the year. So if any more questions, drop them in chat. The link is in the chat. It's at the top of the chat. It's also in the description, or just go to premarketprep.com.
And there's a banner there. Click the banner. You're off to the races. And you know what else we have for you? We also have the code, Joel. Do you want to give them a code for
BZ10. BZ10
will get Benzinga listeners. You come out with BZ10, we'll give you 10% off. So you got a
folks,
promotional
do it
code
today.
Here as well.
No
excuses.
And you know what? And don't be whining at 8:59 and 59 seconds. I think that the cutoff time is I'm going to say 7:00 a.m. I'm not exactly sure.
We have to cut it off.
We have to cut it off, man. We have to.
And it'll probably be later than that. But the reason we have to cut it off is we got to get the link out to everybody who has actually signed up. So we had a lot of people trying to sign up in the last 20 minutes last time, and we have to cut it off 30 minutes early. So the cutoff time, and we're not joking, it will cut off. And the cutoff time, what are you going to do at 8 o'clock, Joel? The cutoff time?
I'll double check.
Tell them 7. Just to make sure.
Just do it tonight. If you want to do it tonight. But there's two good things. One is you don't have to go have attended the other classes, right? And
it's all different material.
Right? It's all new material. If you want the other classes, they're offered at a discount, right? So you can get the other. You can get 1 and 2.
You can get all 3 for what? Is it $139? You can get all 3.
Yeah, what a bar! I mean, Jesus! I mean, make that in one click.
To be honest, you go to some of these other educational providers, and they charge you $3,000 for a week of material, and we're piling it on here for $100. I mean, and the one thing is, and traders are so scared to spend money. They want everything for free. I had multiple people reach out. Well, why don't you just do this for free? I mean, I'm taking a Saturday. We can't do everything for free. We obviously do the show for free. We love you guys. It helps me with my trading. One of the main reasons that we do this show and we offer it for free. But, we don't, obviously offer paid events, but I'm giving away educational secrets. And I'm not just giving those away. Yeah, we give you tidbits on the show, but this is 3.5 hours of education. So, and we have expenses with it too. So.
Yep. Since the guy said no dad jokes, I'll get them out of the way today. This is a good one. Dads love the family pet, even if they initially said they didn't want it. That's true.
It's true.
And then today's is not too good. Dads love pretending that a kid's imaginary food from the play kitchen is the best thing they've ever eaten.
I do that. I did that yesterday. I did that yesterday.
All right. So just
Markets.
again,
Stocks.
the link is on the screen, premarketprep.com. If you have to write it down, write it down. But it's on the screen right now. Premarketprep.com. I'm taking it off.
Rock the cage. Just go to the site. You can click, and put in BZ10, and that's how it will come up. All right, let's go to some stocks.
Let's go to some stocks. We can go to earning. We got a lot of earnings last night and this morning. A number of big names like Chewy, names like Costco, Oracle, Lululemon. A lot of them moving. Any of those strike your fancy, guys?
You're the producer. You lead.
Oh, okay. Well, in that case, what was the one that was down the most? I think, or off the most. I think it was Chewy is the one that got punished the most here overnight off their report. So,
the online pet food store going down in a market where they don't want high growth names anymore. This is shocking.
Yeah.
Dun, 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 dun.
There's my sarcasm for you this morning.
Yeah. Well, a high growth name that did catch the bid for a couple of days, but yeah, it was a tough report. Did not report strong year-over-year sales growth or EPS for that matter. So you're down. What are you down this morning? Like, what is that?
Down 520, 9%, 51.10, new low of the move. I'm just gonna take a stab in this one and just say, remember that Stitch Fix the other day? It was way down. It was just hanging at the pre-market low, and it got a little bit of a pop. So, I mean, two highly uncorrelated stocks, but what day was
You're buying the dip and Chewy?
I'm
the
not
dog
buying
food?
No, it actually made a new low after the pre-market. That was the other day. I mean, I don't know. We get some stuff from there.
Stocks making new lows. You gotta
Time
go.
to go.
New 2021 low. Those are not the stocks I want to own.
No, I'm not trying to buy it. I'm just saying I was just trying to find a correlation here on the monthlies. I'll just give you a monthly number, then you can do what you want with it. 2 monthly lows, 50.22 and 51.25. After that, it drops to 44.75.
What's the update with Moderna? Because Moderna is down $30. It was not down $30 a few minutes ago. It is absolutely.
It was down before though.
Yeah. Interim phase 1 data on the Moderna flu vaccine. Remember, that's kind of the whole point here is that the mRNA technology in the COVID vaccine can be replicated for other vaccines.
Yeah.
And they have some interim data out from their flu vaccine this morning.
Sound
good. They are moving ahead with more trials. It looks like it was that one doesn't actually. The headline. Well, they always spin the headline. They are moving ahead with phase 3, just so you know. But the phase 2, the phase 1 data, according to the PR, did show no safety concerns, boosted protection in older adults. I'm going through the PR right now.
Where's the flu anymore? Where's the flu anymore?
I had it last week.
Did you get your flu shot? Did you get your flu shot?
No, I got my COVID shot. It's supposed to take care
of
that.
You're supposed to get both. Dennis, you had the sell of sells in this one, man.
I honestly, it's very rare. You should draw on the chart. It's very rare I take the entire move. But I pretty much took the entire move. I believe I bought this stock, I'm going to say on like the 12th of November at like 226. And I sold it that day on November 29th at the open, which was 370.
Okay.
So I took 140 points off of that in 9 trading days. And that was the entire move. It's usually I get like 10% of the move. I usually get a great entry and I sell way too soon. But in this case, that's I guess my trade of the year. I was
so
couldn't have did it better.
It's unclear if Moderna's flu shot is better than what's already out there. I think
that's a problem.
I think that's the takeaway here.
That's a problem. That's your problem here, folks. And we've been saying about the Moderna, it's like the flu shot's the wild card. So the wild card not playing out so well yet. You know what? You got a lot of support down in the low 200s. But if we are actually getting, and I'm going to say it again, if we are actually thinking like JP Morgan, we're getting past COVID, it's going to be a tougher slide for these stocks for a while. So that flu vaccine is a wild card for them. If they can get a better one and they can get us all to stop, and their flu vaccine works against all flu strands. Because we know right now the current flu vaccines, they just stick a bunch of strands in there and they're guessing. They're hoping, like, okay, well, there's like 200 flu vaccines. We'll stick them with these 20 that we think are going to be the strong strains this year. Some years they guess right, and it's like 60, 70% effective. Other years they guess wrong, it's like 10% effective. So if Moderna can come up with a better vaccine, a better flu shot, I'd take it. And I think, a lot of other people would take it too. So that's the wild card, but so far, not so good.
Hanging out at the pre-market lows. I'm just going to give you a range in this thing because this is a wild stock. Are they going to step up between like 220 and 240? You had the consolidation, the quiet days. That's just right around when Triple D bought it. Do I think we're going straight down to the low of the move? Yeah, maybe. But just the fact that you had 1, 2, 3, 4, 4 lows in this 220 to 240 zone before you took off. I think if you really want to own this stock, or if you want to, bring in a short from higher up, you got to be nibbling in that area. But I'm just going to give you a zone on that one.
Good support down that 220 area.
Yeah,
20 points lower.
Yeah, I don't know.
Again, you're trying to catch a falling knife.
Yeah,
and I like to just think. I already traded this when the falling knife was going. I waited like a week until the knife stopped falling. It looked like it was sitting on the table, and actually looked like somebody might start to pick it up. That's when I started to come in. I'm not trying to catch on the first down whoosh.
And just look at this. This is the area on the downside that I'm talking about, and just look at this area on the upside from 340 to 360. Look at that. You traded in that range. It was tight. You had a couple tops. Oh, sure, you went to 376, 65. Filled this gap exactly. I mean, that was the day I actually told you to go out there at that gap fill, and it got through it a little bit. But anyways, Moderna. Down, but not out. We'll see how it trades today.
Interestingly enough, Pfizer and BioNTech did also drop on that headline. I just saw.
Yeah,
BioNTech's down 5% on it, which is fairly significant. Novavax, the other one, which I don't know if they're ever going to get their vaccine out there, it's down 8 points as well. I honestly don't know why Novavax is trading this high. I haven't been able to figure it out why it's held up so much better. I guess because they're all excited that their vaccine might come, but aren't they a year too late on this? I mean, I just think a lot of things, execution really went wrong here. I would much rather own Moderna than Novavax.
Okay. All right.
But I don't own either right now.
Let's go back to the earnings here. I want to do Oracle and Broadcom together. Broadcom saying all the right things last night. It was an earnings beat. It was a sales beat. They also announced a $10 billion buyback. Oh, and also we're going to raise our dividend from $3.60 a share to $4.10 per share.
What do these two stocks have in common?
Slow, stodgy value tech.
Exactly. They're value tech. What do we like? We like value tech. That is what has been working here for the last month. We had 2 days where growth started to pick it up here, but it's appearing more and more like it was just a dead cat bounce. They like value tech. Full disclosure, I still own Oracle. I'm in from $9. That's my cost basis on it. So I guess I'm holding it. It's $100 here now. I guess long-term investing does work in some cases. But again, Oracle PE 17 or 18, AVGO PE talking about, it says 40, but I think that's on a backward-looking basis. I don't think it's that high. Where's the AVGO forward PE? Throwing you under the bus here.
Yeah, no, you're not. You're not, because I got the Benzinga Pro right here. The Broadcom forward PE I've got as 19.
There you go.
That's very manageable.
I mean, that's what I'm talking about. These are the kind of stocks that aren't going to get absolutely murdered if we go into this, destruction of a market. I mean, if the market gets really ugly, everything gets hit. But right now, this market is still liking value stocks, and it's not a coincidence that the two stocks, and they do obviously report good reports, but that they're ripping higher because this market likes value right now.
This is very un-Oracle-like.
It's a huge, absolutely huge.
Yeah,
and you're right. Usually Oracle misses. Yeah. This has got to be one of the biggest moves. Like, what was the expected move? Like, the straddle raters on this one must just be like destroyed, because there's no way Oracle is an expected $11 move. It was probably an expected $2 move. It doesn't move much. Maybe $3.
Maybe $5.
5 tops. I'm going to get it right now.
Yeah.
Give us technicals. I'll get it.
If 100.48 was your target, well, there it is right now. It can keep going. It's trading good volume. But I just, take targets here, figure out what that pre-market high is, and then just let it go, whatever. I think the pre-market, at least you're going to get some kind of selling off the open. What about all these people that, when it got up to over 98 back in at the end of October, people are thinking, no, I'm selling this at 100. That's my target. Well, here's your target is $100. So 10048 AVGO. This I think this is blasting off to unknown territory. This pre-market high, if that's your target, 625.75, that's backed off $3-4. So use that as a target. Where to buy this thing on a dip support? Good luck on that one. I have no idea.
Yeah. All right. It's 8:20 here. We're gonna have Ryan Detrick join the show in about 10 minutes, right as the CPI number hits. So that should
Oh,
be
I forgot
fun.
about that.
Fireworks,
Okay.
I'm scared.
No, don't be afraid, Dennis.
You're not afraid.
Don't be afraid. The Oracle expected move was $5.50. I'm sure glad I didn't look at that before, because I probably would have sold it. That seemed way too high, but obviously straddle writers knew something, or straddle buyers knew something.
All right, I want to talk about AMC for a quick second here. It is not every day you see the CFO of a company sell 100% of his shares, and that is what has happened here. So let me outline for you what exactly this means. I'm going to bring up my Benzinga Pro. I've got a news feed up with just SEC filings. You see the two filings from last night. Last night. 4:56 and 5:37 p.m. The first one was from Adam Aaron, the CEO. If you've been following the story, you know he's been selling. He's talked about this repeatedly on the earnings call. So he sold another 312.
I thought he wasn't going to sell, and all he does is sell every other day.
Right. So both these transactions were on Tuesday. Adam Aaron, the CEO, sold a little over 312,000 shares. That's about 75% of his stake, because if you just scroll to the left here, you can see he's only got 96,000 shares left.
They have options, so
yes,
yeah, that's true.
I didn't get there yet. So that was Adam Aaron, and then the CFO, Sean Goodman, sold. Check this out, a little over 18,000 shares. And then look at this column 5 here. Amount of securities owned following the report transactions, 0. He's got nothing left. Now, as you guys just said, they both do have options. And I will also add, if you scroll down in both of these filings, you see this top point there, this top footnote at the bottom. Both of these sales were 10b5-1 filings, which means that they were previously disclosed and that they were part of a plan. They were not random. They did not wake up on Tuesday and say, oh, crap, we got to sell. These were planned filings. And they've both, and Adam Aaron has talked about this repeatedly on the calls. So it's not random. That being said, Adam Aaron has sold a lot, and I can't remember a time where a CFO, the columns showed 0, right? Like he's got no shares left. That's pretty interesting. So there's that here. You had a lot of insider selling, and these were both on Tuesday. The filing hit last night, but the transactions were actually on Tuesday. So there's that.
I don't know. I thought he wasn't going to sell. I thought he said multiple times that he was sticking with all the apes and they were all going to hold together forever, happily ever after. He's been selling nonstop. Like, how many times this guy sold?
He sold. I mean, he sold a lot. He's talked about.
Keeps selling. He sells every month.
And here's what he has said on the calls, because I listened to the calls. Here's what he has said. He has said, "Listen, everyone, I'm a guy. I'm in my 60s. I got all my net worth tied up in this company. That's probably not that's not a prudent personal financial situation, right?
The guy got rich off of everybody.
I need to diversify and plan for my retirement.
Yeah, that's an excuse.
That's what he's been saying.
How much money do you need to retire? So how much money? How many stock did he just sell?
300 and let me get the number.
Well, how much dollars wise?
Oh, he sold. It was 300,000 at a average price of $30. So a lot.
I mean, and he sold 25 million back on November 10th. 25 million bucks worth. I mean, okay, what's up? 20 million, 25 million. Oh, I need to retire. I need that $50 million to retire.
Right. So
let's call what really happened here. Let's call it.
Okay.
You had everybody get really excited and pump the hell out of this thing. There's billboards taken out. There's stuff flying around, behind airplanes, banners, to buy AMC. And this guy rang the register on all of them. This guy is made the money off of all of them. And now the stock continues to leak here. There's a lot of apes that are down money in this thing. And the CEO did not stick around with all of these shareholders like he said he was. He said he just sold 75% of his stake again. Yes, he has options, but he doesn't need $50 million to, retire or whatever it is. He's been selling nonstop. Nobody needs that much money. He just raked it in because everybody brought this up to irrational, exuberant levels.
As I was saying, is what he has said is look, I'm an old guy. I got to diversify. If I was in his position, that'd be my excuse too. You know what I mean? Why not? So there's that. So there are reasons to if you want to interpret these filings as a nothing burger, you can do that because they were pre-planned, and he has talked about repeatedly how he wants to sell on the earnings calls. If you want to look at it as a sign of the apocalypse for AMC, you can do that too. Because how often do you see a CFO end up with 0 shares left? Not very often. So
they can't, look how they've tried to adjust it. Look what they did with the money too. This Nicole Kidman commercial, it's not even good. So they're raising. They've got all this extra cash because they sold the stock because obviously the apes bought it up, and they're using this money to buy Nicole Kidman commercials, and free popcorn and stuff. They don't know what to do, and then they talk and use all the buzzwords, the NFTs. They don't know how to use this money in good ways, and they know they don't know, and then he's sitting there and selling it. So you know what? Very disappointed that the CEO is acting like, oh yeah, I'm one of you, and then he's just ringing the register behind. And I think all the apes should be very disappointed with these sales as well.
Here, let me pull up the charts. It kind of speaks for itself. I've been impressed the entire year at how both AMC and GameStop have held up. That being said,
it has been impressive.
Yeah, that being said, the chart at this point, it doesn't look great. It doesn't look.
It doesn't even matter what the chart looks like.
Yeah.
These things just trade. Eventually, I've had a $10 price target since this thing's been 50. It's been up and down and all around. I'm still sticking with my $10 price target on AMC. Sorry, I just where I think I don't even know if there's value, to be honest, even at $10. But I'm just saying, at 29 at least market cap, it's 10 times the more market cap it was when everything was firing on all cylinders. It doesn't make any fundamental sense. And that's why none of my dollars will touch this thing. Will I trade at the odd time as a day trade? Sure. Will this touch my investment portfolio? Hell no. Will I hodl this? Hell no. Because it doesn't make any sense to be up here. But, I just say, the apes, if you're listening, I'd be really disappointed in CEO Adam Aron. This is just, he rang the register.
Why not? Why not? You can't. Do you blame the guy?
I don't blame the guy, but no. He's kind of talked the talk the whole time. Oh yeah, with you guys. I'm with you guys. Is he really? When he's selling the stock, is he really with you guys? Ask yourself that question.
Yeah.
Makes you think. Okay, it is 8:28.
I gotta go.
You gotta go?
I know, yeah. Dennis needs
going wide.
Dennis needs to hunker down.
You guys still my
going into the bunker.
He's such a scaredy cat. I don't know.
The bunker.
You got your diapers on?
So here's what we're talking about here. We're going to get November consumer price index out in the next minute and a half here or so. Here's what we're looking for. We're looking for overall CPI increase of 0.7% month over month. Year over year, that would be a 6.8% increase in prices, which, if happens, would be like a 40-year high. Core CPI, which just takes out fuel, is expected to come in around 4.9% year over year. So we're talking about numbers that we haven't seen in 30, 40 years. That being said, I've seen a lot of comments from people who were around in the 70s that are like, you guys don't know what inflation really is. We had inflation in the 70s. This is nothing. That being said, we haven't seen numbers like this in quite some time. So first time in my lifetime, at least. So here we go. We got under a minute until the number.
Pre-market high, 88.75. That looks pretty close. Pre-market low, 64.25. That's really close to yesterday's low. Up top, it was thick in the 46.90 handle yesterday. Our intraday high, 94.75. Our all-time closing high, that's my number of the day, 0150. So here we are. We're waiting for the number. We're jumping the gun here. Spiked down to 80, and we just printed 90. They like the number at this point, 94.75. That is your high from yesterday's session. Looks like from the intraday high. Looks like we're going to be there momentarily. Current high 93.5. What do you got for me, Spencer?
We got 6.8% year over year, so exactly in line with the estimate for the overall number. That's a whole other question, Joel. Is what does the number mean? Is it good? Is it bad? Otherwise, who even really knows?
Who cares?
The core number also came in right on the button, right on the estimate at 4.9% year over year. So the bottom line here is inflation did continue to go up in November compared to October, but the numbers were the estimates were pretty good there. I want to get Ryan Detrick's thoughts on this. He is the chief market strategist at LPL Financial. Let's bring him on right now. Ryan, we just got a CPI print. It looks like the estimates were pretty rock solid there. Inline numbers. What's your first takeaway?
Yeah, well, I guess like you said, initial takeaway, stocks seem to like it, right? We all know the inflation issues are there. It's likely we're going to continue to see a little bit higher inflation, probably until the first quarter of next year. So this just kind of seems like we're all super focused on it. We're going to dissect all the numbers, but at least the initial reaction, right? It's not rocking the boat, and the bounce this morning looks like it's still intact. So I think that's a good thing. We all know there's inflation. It's the market's way of anticipating, that potential peak early next year, and we still think that's probably the play here.
Yeah, I think with this kind of number two, I think it gives, everyone was worried about what Pump and Powell was going to do next week, right? And how, is it one hike? Is it two hikes in 22 or 21? Is it two hikes or three hikes or four hikes? I mean, this is kind of a tap in, it's not a bad number. Things are in line, meeting expectations. I don't know if we could go back using the word transitory. But we've had some drops in some commodities, right? And also, is inflation always bad for the market? I mean, is there inflation in stocks and your stock prices, right, Ryan?
Yeah, I mean, historically, what's one of the best ways to combat inflation is to own equities, because companies can charge a little bit more. Eventually, there's a point when you charge too much. And by the way, the word transitory, so Raphael Bostic's in charge of the Atlanta Fed. Apparently, they have a swear jar, and it's not for like bad words. It's when you use the word transitory. So, yeah, I mean, now we're going to be hyper-focused on Powell next week. I mean, he kind of let the cat out of the bag, a couple Tuesdays ago when he went off script. He sends a script to Congress what he's going to say, and then in Q&A he said, yeah, we might start to taper sooner. So that's the market. That's all that volatility. We think, that volatility last week, maybe who knows? Maybe 2/3 of that volatility is because what Powell said, not so much about Omicron. You look at the Omicron, the headlines, yeah, but some of the stay-at-home stocks are getting killed. So if they're getting killed during Omicron, worry, maybe something else is there. And it was the market readjusting to, hey, tapering's coming. Maybe there is a sooner rate hike. But markets have a funny way of adjusting, and still the economy is strong, and that's what we focus on.
I saw this tweet from yesterday. I want to bring it up from Northman Trader. He's a great follow on Twitter, outlining the scenarios for today. Basically, like if the CPI number misses, that's bullish. If it's in line, that's bullish. If it's a beat, that's bullish. If it's a big beat, that's also bullish, right? It's like it doesn't really matter because you can tell yourself a narrative for anything. And I thought that was funny. So the initial reaction, as you guys are noting, seems to be good here. Ryan, we've got speaking of the Fed, we've got a meeting next week. Following that, we've got options expiration. I'm kind of looking for next week as like kind of the last big show of the year. Is that how you're looking at things as well?
Let's hope so. Let's hope the last 2 weeks of this year are kind of calm. I mean, that's right. I mean, we've got the Fed and everything. And let's not forget, historically, and maybe, guys, I'll try to share my screen. I've got a couple slides. Let me try to share my screen here for you.
Oh, yeah.
You
always have some good, like, end-of-year stuff.
Well, I'll do my best to show you something here. Here we go. I think it's going to work. Here we go.
There we go.
All right. So we did just release our outlook this week. So I'll give a little promo here. We called it passing the baton. And the idea is we know wrong word. We know monetary policy and fiscal policy got us here. We say it's time to pass the baton to consumers, small businesses. That's going to help the economic cycle of growth. But a cool chart, I think, that you guys might like, listeners might like. we're mid-cycle, right? I mean, we're 2 years into this economic recovery here before you blink. And what does that mean, right? This is the whole seasonality, kind of what's the world saying? Well, in mid-cycle, guys, we went back and looked. We found 30 mid-cycle years. What I'm showing you here, those are the bold numbers. All these listeners got to know is mid-cycle years are higher 80% of the time, up 11.5% on average. That's pretty good. When you're up 20% for the year, like we probably will be on the S&P, that next year has been higher 9 times in a row, 7 of them up double digits. Only twice in a mid-cycle year, where stocks down double-digit returns out of 30. So I just spit out a lot of stuff there, but the economy's still strong. We're still moving. We're still pretty optimistic on things. And here's the one, maybe the seasonality one you wanted. Hopefully you see it there. Santa might make an appearance is what we say. The first half of December historically is kind of choppy, kind of volatile. Hey, that's kind of what we're dealing with. It's that second half of the year when everybody kind of says, okay, we're done. We're going to take a break. And why is that? Everyone say, why does Santa come to town late in the month? Maybe it's because if you've got gains, you don't want to sell them. It's a seller's strike to end the year, not so much a buyer's bonanza, a seller's strike. With all these big gains we have, we think, hey, that could happen again. And we still think equities go a little bit higher, to end this year.
Nice.
And I got one more. Since we're talking Fed, why not? One more real fast, guys, and then we can do some questions. We took a look at what happens when there's rate hikes, right? Well, I know there's a lot going on the screen. This is the last 9 cycles of the first rate hike. You know what stocks did 1 year before that? They were higher every single time a year going into that first rate hike. Yes, no one knows when the first rate hike will be. The point is, early in the economic cycle of growth, don't be freaking out about hearing about a rate hike. Oh, and by the way, what happens after the first rate hike, the last 5 first rate hikes, go back to like late 80s, a year later, stocks are up like 10% every single time, right? So again, rate hikes, the Fed, it's scary. It's really not. The economy's strong. It's still growing. This is normal. We're taking off the training wheels by doing tapering, letting the economy grow on its own without so much Fed intervention. We think that is a good thing. So I'll stop sharing. I just wanted to get those charts out there. Thanks.
That's across the board, though. That was the S&P 500. There are surely there are pockets that it doesn't work for.
Yeah, that's a good point. I mean, again, early where we're still investing and we still think, cyclical over defensives. We still like industrials, materials. I mean, I know you guys talk about these things. Industrials are relative strength starting to break out. So we'd say still early in a cycle and early when you're going to start hiking rates. The more defensive areas, your utilities and staples, those are the ones probably to avoid. And that's what we've been saying all year. And we're still in that camp that you want to play offense early in a cycle of growth here. And we're still there.
What about growth stocks?
Mm-hmm. Yeah, well, for this year, right now where we are we've got about 20,000 advisors and we manage about $70 billion. Right now, we're about 53% value, 47% growth in our models with our advisors. We're actively talking about maybe potentially getting that a little bit closer early next year, but we still think value's got a little bit more lead to it. Yeah, the 10-year yield and I guess you say surprising move lower in yield curve hasn't helped financials, the biggest part of it, but we're still slightly overweight value here, and we do like small caps over large, which I'm aware that's been a little struggle also, but we think maybe sometime in the middle of next year we might kind of even those up a little bit, but that's still how we're positioning our models. Early in a cycle, you still kind of want to play those in our opinion.
Correct me if I'm wrong, but don't small caps historically outperform?
Yeah, I mean, great point. They do. I think they're one of the only asset classes, if you slice and dice like every decade versus inflation, they've historically beaten inflation just about better than any other group. And we all have seen that same Russell 2 chart when we had the breakout a month ago. We all got excited and just as quickly came back down. So Mr. Market pulled the rug on some people there. But again, we still think eventually that does break higher, much like a lot of these markets, right? We've just had consolidation and we still think we're in a major bullish phase here and we wouldn't want to fight it.
Did you have any targets for this year? Year-end targets? I'm sure they exceeded them.
They did. I mean, we're like 4,700 or so we're kind of pretty much right there, I guess.
Wow.
We upgraded it throughout the year. Our target next year, we just released the outlook. We're saying 5,100 on the S&P, and I'm aware that's not that far. And I'll be honest, guys, amongst friends on here, we might upgrade that. I mean, we just still think things are good. The key concept to me this year was one number. 165. That's what S&P 500 earnings were supposed to be at the start of the year. You know where they're coming in? 205. That's like 25% higher. Tell me how much the S&P is up for the year. 25%, right? So yeah, we think earnings come in around 220, but let's be honest, the consumer continues to surprise to the upside. The employment picture is not perfect, but the consumer's got about $3 trillion in savings and money markets. There's some cushion there as the economy continues to grow. Maybe we surprise the upside again, and earnings will justify this bull market, and we maybe a little bit higher than 5,100 this time next year, when all is said and done.
Do we stick at home with our dollars, or is there anywhere to look overseas? I know.
Great question, Joel. I've been wondering that myself, actually.
But the international investing?
Yeah. I mean, China, I mean,
Europe, anywhere outside the U.S. because U.S.
Yeah, I mean, clearly in our diversified models that we run, we do have international exposure, but we like the U.S. more. We've been overweight U.S. for 5 years I've been there. It's almost a broken record, right? You guys see the same charts. Look at the relative strength of what's happening to developed international, emerging markets. I reread our mid-year outlook 6 months ago. We actually wrote, we like U.S. more, developed international second, and then EM third. And we said there could be some problems with EM because there's some underlying issues with China. And now you see all the regulatory stuff that's going on. They're trying to slow. I know the headlines say, China's now trying to speed things up, maybe because they slowed it down a little too much what they wanted. Whatever it is, we'd say EM is one you probably want to avoid. We need a little more improvement there, but we're just sticking with the U.S. as our major overweight call, which has been the call for 20 years now, right? And I don't think we don't think it's going to end anytime soon.
What could upset the apple cart?
Mm-hmm. Well, I do think we mentioned China, right? Everyone talking about the same stuff. Let's be honest.
Okay.
The Fed hikes too soon, and you choke off growth. Inflation's out there. The one that gets me that people aren't talking about U.S.-China relations. Look at the Olympics, right? We're not sending certain people to the Olympics. The back and forth. We all remember February 18 when the trade war started, and we slapped on the tariffs to, I believe it was washing machines, whatever it was. That was a major peak for stocks after the huge rally after the 2016 election. So U.S.-China relations is the one that gets me that could be, hate to say monster under the bed, but one that I don't think is getting as much play because China's been doing a bunch of stuff to their own country, to their own stocks, to their own industries. What if they get bored of that and want to do it to the U.S.? And everyone thought President Biden would remove most of those tariffs that President Trump put on China. He hadn't removed any, guys. There's talk about it, but he hasn't. So the relationship with China is about as low as it's been. That could upset the apple cart sometime next year, potentially.
Not to mention the SEC, the new SEC guidelines that may result in who knows how many companies being delisted.
Yeah, well, great point there. Yeah, that's a whole nother thing to worry about.
That's a whole other thing you got to think about if you're looking at China.
Good point.
One more from me. I noticed some strength in the Johnson & Johnsons lately, and some of these some of the more value conservative stocks. You think that's just a little a 2, 3, 4 day rental, 5 day rental of these stocks just for getting a little move out of them. Mm-hmm. Or are there any areas, maybe healthcare, that are a little beaten down and maybe are going to catch up, or going to stick with what got you here, the strong value
we are sticking with what got us there. But you're right about healthcare. I mean, you look at healthcare, it's kind of a mess. But you look under the surface there, like drugs, right? I mean, Pfizer, J&J, some of these bigger companies, enormous companies. So they're splitting themselves up some cases. But still, there are some nice looking charts. Haven't gone anywhere for a long time that are breaking out. So that's one potential area inside healthcare, just boring old drug companies, but there's some tried and true there. And again, maybe get a little bit of yield. Every time I talk to advisors, we're going to get yield. Well, the bond market's tough. We still think yields go higher. We're a little iffy on the bond market. We have been all year. Bonds are negative for the year. Stocks are up 20%. That's been good for our portfolios. But still, we think maybe a little bit of yield can be found in some of those bigger drug companies, and that can be a nice way to get some income as well.
Ryan, this will most likely be the last time we speak for the rest of the year. Do you have one name?
Oh, wait a second. Wait a second.
You can get to your question.
We got something to talk about, Ryan.
Right. I guess my question's not going to get answered.
What would that be?
Ryan, we got something to talk about. Football.
Yeah.
Yeah. How about those Wolverines?
Anything's possible, I guess, right?
I can't believe I let them go. You've been on the show for how many years? Over 10 years?
A while. Yeah. Yeah, probably. We'll say 10. I mean, a while. Yeah. First time you get to gloat a little bit, huh?
Yeah. The first time. Well, I don't know if we had you on in 2000. I wasn't doing PMP then, but just, what do you think? Do you think we got a chance to those Bulldogs? And then what if we get by the Bulldogs and we go up against Bama?
Yeah, I mean, at this point, everybody's got a chance. I am originally from Cincinnati, but I'm a Xavier guy, so the fact Cincinnati's in there, I'll root for him. But I still like Xavier.
Oh, you know, he pulls the Cincinnati card on.
Well, I
That's
am from
great.
Cincinnati, but I mean, no, I'm the Ohio State fan for football. So hey, you know, you gotta be the best, you gotta beat the best, and they are playing the two best teams potentially. Well, Ohio State was in there, but the next two. So I think there's a chance. Although my Alabama, they just looked terrible against Auburn, and then they looked like Alabama the very next week. So that's just until you knock off them, it's hard. But hey, I think they could beat Georgia, and then maybe coin flip with
Ryan. I know you have to run. You told us you had to hop at 8:45, so we'll let you go. Ryan Detrick is the Chief Market Strategist at LPL Financial. He's also Senior Vice President. Ryan, always great to have you on. Have a good holidays, man. We'll talk to you again next year.
Yeah, I'm going to go talk to your advisors now. Appreciate it, guys. We'll see you next year. Bye-bye. Good luck.
Oh, I'm sorry, Ryan. I cut you off there.
Yeah.
My apologies.
Sorry for yelling there, Zopa. I didn't mean to hurt your little ears there. But you know what? We can talk whatever we want about this show. So don't tell us it's not a sports show. If I want to talk about sports, I'll talk about sports. So live with it.
All right. While we were on with Ryan,
listen to something else.
All of tech just ripped.
We want you to keep listening, so I'll apologize.
Dennis comes in the apology.
Joel gets wound up when somebody talks bad about Michigan. So it's all good.
Dennis, what happened there? I mean, did you just try and lift stuff, or was it too late?
To lift some things. It's a tech rally. So talk about the data. Go back and talk about it. You know, enlighten me here because I was busy trading. But what I can see clearly was tech was underperforming this morning, and now it's outperforming. So obviously, not as bad as we had anticipated.
The numbers were actually right in line. CPI year over year.
So not worse.
No, right in line. 6.8% year over year for a CPI. Core was 6.2%. I'm sorry, core was 4.9%. You know, both numbers increased from October, and both numbers are like 40-year highs, basically 39-year highs, but not too far off what the market was expecting. So, you know, it's okay.
And that's why we're getting a rally in tech because obviously, you know, this market's been concerned here and, you know, numbers in line. It's not worse than expected, which is good. I mean, inflation is the major issue that we've got going on. So I don't know. It's, you know, the question is this just, you know, a bounce and, you know, are we still going to be worried? But not being worse is definitely a step in the right direction.
Yeah, for sure. So all tech caught a bid, and that was that.
Yeah.
Basically,
I see.
Tech has been bid pretty.
Yeah.
Everything actually got bid. There's actually, it's kind of a broad-based rally, I would say. The majority of stocks did get bid on this number, but tech was actually like stock like Tesla was trading the red ahead of the number. It's now up $12. So you can clearly see growth tech kind of turned it around on this number, which, you know, makes sense if you think about, you know, everybody's worried about, you know, inflation being the boogeyman here that we've been talking about for a while, and that's why, you know, the punch bowl is being taken away. I mean, you get some good numbers, you start seeing inflation coming in, it's like, oh, maybe we can keep the punch bowl. So, you know, that's what the market's thinking here.
All right. We got a few more things I want to get to. Let me just do this. Do either of you know or want to venture a guess as to why Peloton was down so much yesterday? I think it fell below 40.
I don't know. I wish I would have known, though, because I'm getting stopped out on that position.
Does anyone in the chat want to venture a guess as to why Peloton was down yesterday? Well, what was it down? It was down, what, 3.5%? No, that's this morning. It was down more than that.
No, it was down a lot. It gave it all back. It was down like 8-9%.
No, it's nothing to do with Joel. Nothing to do with the market.
Did a bike catch fire?
Oh, you're not that far off, but no, no, it's not. That's not.
Okay,
that's not right.
Spit it out.
Okay, 3 letters. HB. Yeah, we got to go on. HBO. The HBO is the reason. If you are a fan of Sex and the City and their new show, spoiler alert. Turn the show off right now because I'm about to spoil something.
Okay.
The new show debuted yesterday, and a major character died on a Peloton. And it was trending all over social media yesterday. And that is why Peloton shares.
I got to look everywhere. I even have to look to HBO for the information here. I was wondering why Peloton was just getting murdered all day long. And I was like, well, they're not. All growth tech was getting hit, but not like Peloton was getting hit. So,
and
Sex and the City cost me my swing trade.
Do you know that this was had the girls over for Thursday night sushi, and Emily actually did the spoiler alert. It was Big that died, right? Oh, I'm
Yeah,
sorry.
Joel just
Oh,
if you're gonna watch it, sorry, Joel just spoiled it. But yes, Big died
on
on
a
the Peloton.
Peloton.
Yeah,
It was a
she
crazy
did it
Peloton
happen,
accident.
and like Dana was mad at her, and Lisa. I mean, I don't know. I mean, that show. I love these when they come out with these like shows that were shows, and then they make them shows again. But Emily failed to mention that he was on a Peloton. That's horrible. That's absolutely
It's
horrible for
horrible
them
for
to
my
do
swing
that.
trade.
Yeah,
It was just starting to show some life.
So
The
hold on.
stock was just starting to show some life.
So imagine you're Peloton and you start getting a bunch of phone calls yesterday from the media being like, "Did you know why HBO was going to ask you for a Peloton? Because they have to, they have to ask for a Peloton." And Peloton's like, "No, they didn't tell us anything. They didn't tell us. They didn't tell us they're going to use it to kill a character."
that is unbelievable.
Yeah.
You know what? Excuse me. I'm going to cancel my HBO right now.
Okay. All right. I thought
That's
that
ridiculous.
was interesting. I want to
I'm
talk.
gonna buy more now.
I want to talk about AI, ticker AI as well. They got a government contract, and the stock is up 15% this morning. Actually, I think it was up more. They got a $500
Holy.
million DoD contract that they announced this morning. So AI is doing something it very rarely does, and that is go up.
I screwed this trade up massively last night because this thing started going up, and I was like, for real? A $500 million contract? They're going to rally this thing $5? That's what I was thinking last night. I'm like, that seems way overdone. So I short it. Don't short these rocket ships on the headlines because this thing just kept going up and kept going up. So I shorted in the 37 handle. It's 38, it's 39, it's 40. Like 2 minutes later, I was like, what the hell? And it went all the way to 42. $42. It came back in a little bit. I'm like, okay, I'll eat my loss and get the hell out. But holy mackerel. So I ended up losing, I think, $2.50. And obviously, if I would have held it, it would have came all the way back. But I cannot believe. So 2 lessons to learn from my stupid trade last night is 1, don't short into the headline. Let it settle, dust settling. Then you short it, even if it's stupid, because the things can just get more stupid. And that's what it did last night up at 42, just got absolutely ridiculous. In a market that the market doesn't like growthy stocks. They bought this thing right back up to get almost all of its losses back from the last month. Crazy town. But anyways, I was too early. I got shaken out and obviously came back down. So don't be too early. Timing is everything, even in day trading.
We've settled in here. I doubt if you want to see that 42 again, I think you might have to wait for another day. I've even said resistance now coming in. I mean, even 39, we hit that about a half hour ago, and you've leaked $2 off it. So I don't know. Is there any dailies to look at here? I think my focus number right now would be. I think you'd be lucky to get 38.15, 38.77. There's a pair of highs there. So if you do get a pop, that's ahead of the $39 area. Will they give it all back today? Probably not. Too many people are stuck on this one. The top of the range from yesterday comes in at $34. I think you could see that in a couple days. So.
Shout out to Sadat in the chat. I did not see this yesterday or at all. He's saying that Goldman said that the XLF ETF is adding 4 stocks that I, to be honest, had assumed were in it the whole time. It's adding PayPal, Square, MasterCard, and Visa. I did not know. Yeah, the XLF, the largest finance sector ETF. I didn't know that they weren't already in there, to be honest. I just assumed they were, but they're not, but they're going to be. So PayPal, Square, MasterCard, Visa.
So when I'm doing XLF versus the banks right now, I'm going to have to rethink that trade.
So Goldman said S&P is doing this, or S&P said they're doing this?
Sadat's saying like Goldman said S&P is doing it.
Oh, really? Goldman tells S&P what to do?
Dude, I don't know. All right.
I'm sure Goldman's just enlightening us that S&P is doing this. I'm pretty sure that Goldman doesn't call shots.
I don't think Goldman is dictating what happens here.
Yeah.
But anyway, it's a good lesson. It's a good reminder that if you have ETFs, know what you own and what you don't own.
It's true. It's
Okay?
so true.
You got to actually look at the underlying holdings.
You
Don't just go
do.
by the name. Just because it says the word
Yeah.
financial, or just because it has the word inflation in the
Yeah.
name, doesn't mean it's going to hedge against inflation or whatever.
Yeah,
I mean,
it's all true.
look under the hood. It's always a good
All
reminder.
true.
Good reminder.
Can we really just call a spade here? And the call of the year was
You're not
probably
supposed to say
made
that anymore,
yesterday.
Joel.
No,
Somebody told us I was racist. I don't know the history to that, but I guess we got to stop saying that one too. No more
can you
spade
call a
spade.
heart a heart?
Yes, you can go.
Or a diamond? Sorry if I offended anybody on that one. What's Kathy's ETF?
Which one? ARKK?
No, the one that Dennis was talking about yesterday. I've
Oh,
never heard him so convicted on something ever on the show.
that was
Well,
pretty
I was going back down. I mean, nobody could short it was the problem, though.
CFSI?
Citadel killed it probably on that, though.
You're
The
gonna get a
people who
Christmas
were
guy.
exempt.
What's the symbol on that?
CTRU.
CTRU. Thank you.
What a
Yeah, it came
symbol.
right in. 22.70. Look at the pre-market chart. $22.70. I gave multiple warnings of like nobody can short this. This is an ETF. It's going to come back in. I didn't know that they're already doing, but they obviously already are doing the creation redemption because it came right in at 9:30. So, I mean, you got to know these ETFs track the underlying holdings on a continuous basis. You pay up 9% for something and the market is down that day, you're throwing away 9%. I think it was actually up 12% at one time. So just because, it's not efficient in the pre-market doesn't mean it's not going to be efficient in the regular session. So everybody who got excited about the thing at 22.70 just overpaid by 12%. I'm sure our off-exchange market makers thank you for that.
All right, we have a couple of minutes left. If you have a ticker, drop it in the chat. We will take a look for you. I apologize if I know I missed a bunch here. Today's one of those days where we're in a fast market. So drop your tickers in. We got 4 minutes left, and then we're going to hop off here. McDonald's. Okay, Johnny Oski. McDonald's. Let's take a look at that. How's that doing?
It's up this morning. Again, we are buying everything here this morning, but if we go on to a risk-on trade today, and right now it's risk-on, it doesn't mean it's going to continue. I would expect this actually to give some back. So let's go look at the imbalance. You can always look at your pre-market imbalances, give you a pretty good feel. It's actually a sell imbalance here too, so I'd be a seller of this rally, McDonald's. Not on a
all-time
long-term
high.
basis, just short-term.
Made a new all-time high yesterday, trading up $1.77. Look for some paper in the book, maybe something lurking at 263, 264. Keep you hold the open a little bit. Support right now will be at the top of yesterday's range, which is 263.10. And if I just go by the drive-through line indicator, you have to remain. But that's what I do when I drive by these. I'm just like, oh my god, why would people wait so long in line to get that food? But
They're
they
busy.
do. So
Well, I have
drive-through line indicator. Is
two
Luke still a big McDonald's guy?
I think he's more of a BK guy, but I have two reasons for why the line could be long, and it's not necessarily bullish for McDonald's. One is that
No workers.
dining room is closed, or they don't have enough workers for the dining room, and they're just doing drive-through. Two, you don't know how many of those cars in the drive-through line are DoorDash or Uber Eats. So think about that. Okay, let's do some more tickers here. Someone had asked about Corsair, CRSR earlier, so let's cover that right now. I did see that they unveiled a new controller yesterday after hours, a new product line. We haven't looked at Corsair for a while.
It's growthy. It's getting a lift here today. It's a matter of whether this rally holds. So, it is good news. It is good fundamental news that inflation wasn't hotter than expected, even though it came in line. So you're seeing a relief pop in a lot of growth names that got hit yesterday. This is still thrown in the same camp of growth value. So I would expect this to be strong. Keep an eye on on your cues. Keep an eye on your growth tech. Keep an eye on ARKK because that's going to dictate the move for this thing today. At a certain point in time, is Corsair cheap? I thought it was cheap, but at the same time, stock just keeps drifting down in a clear downtrend. Hard to break those trends.
Dennis gave you a lot of things to look at for that, but think about. But I'm just going to tell you, look at 22.37, matching highs from the last two sessions. It gets through there. You got some, got another pesky high in the 22 handle, but this thing ain't going anywhere until it takes out 22.37. At least holds it. Don't let it go to 40 and then come back right back down under. Double top. That's what you need to get above Corsair.
Silence. Oh, it's kind of nice.
I
Kind of like the
I was on
silence.
mute. I'm sorry. We'll do the last one. We'll do NVIDIA here.
NVIDIA is either the top. It's either the biggest gainer or the biggest loser.
Yeah,
in the
it's
S&P.
volatile right now for
Yeah. I'd say you got a gang trying to get out here. 323, 324. That you're up $6. You're still $12 away from it. I'll make that a 4-star level. Resistance 322. Maybe getting a little tired.
All right. It is 9 o'clock just about, which
9
means Joel will head
o'clock on
over
a
to
Friday.
PreMarketPrep.com. Dennis will go back into his hole.
Yeah, so don't forget, sign up for the event. I'm going to be talking a lot. I guess if you don't want to hear me talk, it's a different story. But Rob's there, so Joel, calm me down.
Yeah, I'm gonna interrupt you just like I do on the show, but I just want to thank everybody that signed up. My computer here is sparking, and folks, it's the other thing that's good about these Saturday events is that Dennis doesn't have 98 positions going on and
I can
different
concentrate
things
on what
and
I'm saying.
Kids or
Yeah.
things going on. So it's gonna be a great event. I'm going to hop off now, cover all these other stocks on Pre-Market Prep Plus. And then Mitch asked me to hop on at 9:45 on live trading. So I'll see how the open's going. I may hop in there too. And,
Okay. I didn't know
say
that.
hi to you guys. But
All right.
great show today. Sorry if I offended anyone. Not really.
Yeah, I don't think
all right. We'll see you later.
All right. I want to wrap as well. Live trading will start in a couple of minutes here. Before I wrap, though, I just want to tell you about a new sponsor we've got here on Benzinga's YouTube channel, Nightscope. Today's show is brought to you by Nightscope. They have fully autonomous security robots that have generated over $13 million in lifetime sales and over 1 million hours of field operation. Nightscope recently announced the commencement of its Reg A Plus offering. If you don't know what that is, Google it. With over 28,000 investors and $100 million already raised, Nightscope is reimagining public safety at a time when the nation needs it. To learn more about Nightscope's offering, go to www.startengine.com/Nightscope or click on the links that I'm putting in the chat right now. There is one link. Here is this link I also need to put in here. And then as a disclosure, I'm going to throw that guy in there as well. So again, startengine.com/Nightscope. That's the page I've got up on the screen right now. Okay. Oh, wait, 1 second here. Let me just do that. Sorry. There we go. Okay. Now, that being said, please hit the like button, everyone. I'd appreciate that. How many likes are we at today? We're at 288. Can we get to 500 likes? We got like 1,400 people here. Can we get to 500 likes? I think we can do it. I think we can. We can do it. All right. 9:05 is when live trading. See, you got the graphics up. 9:05 is when live trading will start. I'm going to head on over there. Myself, Mitch, Ryan, Junaid. I will see you guys there. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice or any advice for that matter. All right. I'll catch you guys over on our next show. Everyone, good luck out there and stay green. PreMarketPrep.com to sign up for tomorrow's event.